Hi guys, it's Crypto Bear Pedro speaking and welcome to today's video report. Today I've got for you, a top-down analysis starting off with a weekly chart, a bar chart for Bitcoin USDB spot price on Bitstamp exchange. I've mentioned, many times the importance and relevance of using one and the same data vendor and provider in order to keep the consistency in terms of relying on a specific data flow, right? So stick to one exchange, and that's exactly what we are doing here. Well, to kick it off, I do think, it's very important to understand the current market situation context from a larger perspective, which is exactly what we have here, right? So of course, this larger term pattern, some time ago, it kind of like broke to the downside, of course, generating cascades of liquidations, and there the capitulation spiked to 75% drawdown of the peak, which is at the value of 17,500s, right? So this is the main support right now. And until we actually close for the first time through the 200-week average, I would argue that the Bitcoin, remains and maintains the consolidation in a little bit of an uplifting, upsloping form of this potential bull flag or bear flag or a bearish pennant pattern, if you will, right? The bearish pattern, the bearish half mast formation, the pennant or a flag, basically means that the price action, hits a strong downwards move, right? It takes some time to kind of like a little bit, lift up, but then the bearish pressures, the selling pressures are strong enough to kind of like beat the prices again, right? So this typically comes after a sharp massive decline, right, which states and comes with this so-called mast, right? The price action attached, sharp aggressive violent price action to the downside attached to the pattern itself, right, which is here, of course, comes with the bull bearish flag or bearish pattern configuration. So here instead we are looking at a potential pattern which is not yet confirmed. However, the longer time it actually takes to develop under the 200-week average, the bigger the chances and the more aggressive the odds are for the bears to continue downwards, right? So this is the local context. Now, on the top, we have an average, which is basically a 200, which is basically a 20-week average, right? So 20-week is, almost a half a year. 26, weeks is a half year to be specific. And here on the bottom in the dotted curve, we have a 200-week average. So historically speaking, the 200 buying out, into the area around 200-week average has been more profitable than not, right? Each and every single time the Bitcoin chart, kind of like pulled back and threw it back, for the drawdown to the historical 200-week average, it always proven, profitable over the longer period of time, right? Of course, because this is longer term chart, it typically brings longer term implications, and it should not be considered, a short term kind of like an immediate buy signal that it's going to immediately run it back, and bring you infinite amount of profits. That's not necessarily how it works. Instead, we are looking, like I said, at a pattern which has been proven profitable, as in buying around the 200-week average historically was proven, more profitable than selling into such. However, it does not necessarily mean, the reversal pattern is complete, right? You may argue that again, while we cannot rely on a small data and small data sample as in just one reversal pattern in the past, like here or here or here, three data points are too little and are not enough to kind of like to get some conclusive statements within the terms that Bitcoin performs. However, you may argue that there is certain configuration, there is certain repetition in terms of how profitable the 200-week average buying becomes, right? So it makes sense to anticipate that, with a little bit, with a grain of salt, that if the pattern actually completes, and it takes some time to develop here under the 200-week average, perhaps with a little bit of more capitulation coming, I would argue that this may be like, one of those kind of like obvious hindsight buys, from the past, right? Nothing is obvious everything is obvious in hindsight, but nothing is really obvious at the time of making the decisions. And for that reason, I would expect that when we finally get this breakout to the upside confirmed with a at least weekly close through to the resistance of 200-week average of 222 500s, the chances are we may see recovery into 20-week average, which is the shorter term or actually medium term resistance, right? Which is right now at around $30,000, $32,000. And again, a mean reversion move to the upside, right? Reverting, pulling it back to the closest longer term valid mean, which is this 20-week average. I would argue maybe pending, provided that we get to see the close through 22,500s. If we take it then to the daily chart, I would argue that we might be looking at, well, first of all, the 200-day average right on top, and then 20-day average, which is like a typical configuration of a shorter term average and a long term average, right, which comes from the 200-week and 20-day. 20 days, the short term version. If you even turn off the chart for a second, right, then you would argue that the chart itself represents smoothed price action that is sideways, right? Decline over the longer term 200 days, and at the same time sideways price action development, which may or may not be just another instance of this. Sideways sideways has sideways patterns have in common all that they come and develop from indecision. They come from indecision of the market. They come from an overall lack of trend and lack of follow through, right? So I would argue that if we actually don't close the day today through the resistance of 22,500s, right, we might be looking at yet another mean reverting move to the downside locally, at least putting a danger there, right? And it would make it no different than, again, having a resistance, right, breaking it over, with a breakout basically, but the breakout then fails, right, and closes below the broken resistance, which means it fails to bring this polarity change principle to action and convert a broken resistance into support. And if that is the case, this commits to a breakout failure pattern, and the failed breakouts tend to perform better in the opposite direction than the regular pattern. So this is why I would argue that if we don't close the day today through 22,500s, we may commit to yet another mean reverting move to the downside, potentially to the short-term mean, again, support at around, to be more exact and specific, 20,500s, right? And again, while nothing of that is actually confirmed, we have to watch the daily close in order to anticipate any further price action development. If we do, however, get this major breakout confirmation and there is a follow through, right, the chances are we see major continuation for the first time in the factual bear market rally into the resistance area here, into 28 $30,000, or even a larger 200-day average mean reversion towards $33,000, right? Nothing of that is set in stone. And, there is a lot of exogenous signals and tensions, of course, coming with the FOMC meeting next week, right? Which may actually, come up with a lot of, I should say, economic invalidation to any bullish thesis, to any bullish case, provided that the economy keeps worsening, keeps getting weaker and weaker, which would raise interest rates even more, right? So this would be typically bearish for stocks and for cryptos for a correlation proxy. Hope that helps.